Good morning. UK wages are on the up, so we're going to look at what this means for the Bank of England meeting on Thursday. Last week we saw UK economic growth report slightly lower, down 0.1% on the month, and just the general trend of the UK economy has been relatively sluggish, especially when we compare to the US. Now, despite sluggish growth in the UK, unemployment figures today highlighted that labour markets remain relatively stable, so the unemployment rate remained at 4.3%. We also saw an estimated increase in the workforce, rising by 173,000. Now, this is a survey, but if the estimate is correct, it suggests that the number of people in work is at a record high level. Now, strong or firm labour markets are really supportive for economic growth. It facilitates greater consumption, greater tax receipts, and that should allow the government to spend more. So all positive. Now, we should treat the data in terms of the unemployment rate and the number of workers added with a degree of caution. There's still some issues around the quality of the data, and that's been discussed by the Bank of England in recent months. Also published today was wage growth data. Wages released today for the month of October, or the 3 months ending October, showed that wages, excluding bonuses, were re-accelerated. They increased from 4.9% to 5.2%, and actually last month was revised higher. So wages re-accelerating is supportive for future consumption. When we look at wages including bonuses, wages also went up. It went from 4.4% year on year to 5.2%. This was well ahead of what analysts, investors were expecting, and we also saw an increase in wages when we look at the subsectors within the economy. Nearly all subsectors saw pay increases. When we look at the private sector, wages were higher, rising from 4.9% to 5.4%. The private wage increases is something that's closely followed by the Bank of England. They have to judge how wages are trending. Is it in line with their inflation target of 2%? The data this morning suggests it's not, and we'll also get tomorrow the CPI, or consumer price inflation, which if it comes in above 2% again, it does risk that inflation is remaining more elevated for longer, and therefore would really challenge the Bank of England on Thursday, who may give a more cautious tone about the prospect of lower interest rates next year. Expectations that on Thursday that they will not adjust interest rates. Their governor, Andrew Bailey, has in the recent weeks been talking about that over the next 12 months that he expects interest rates to fall by 1%, which the data this morning, and we'll have to find out what the inflation data is tomorrow, would perhaps challenge that expectation. That's everything from us today. Thank you for watching, and we'll see you tomorrow.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.